Hello traders, today is the 25th of May. My name is Neville Hornsey, market analyst YouTrading, and today I'll be looking at the price of gold. Okay, I'm going to start with the daily chart on the Active Trader platform. And we can see here I've marked up some yellow horizontal lines to mark out some significant highs and lows. Starting with 2020, we've got the March 2020 low here at 1450, all the way up to 2075 is the high of 2020. Then we move to the right, we've got this next high here, 1959, all the way down to the low of 1675, and that is the trading range of 2021. And then if we move to the right here, obviously this is 2022's price action. We moved up through, from start of January, really, we moved up, broke through the 2021 highs into the 2020 highs here. Anybody that was left holding along was able to get out, got neutral, to stop themselves out essentially. And then we saw selling pressure come back in at the sort of beginning of March 2022, got back inside the 2021 range. And then we found that that high there essentially became resistance again around April time this year, before we sold off back towards the $1,800 an ounce. So that's where we are at the moment. We're kind of back in the middle of the range that was formed in 2021. We've rejected the highs of 2020, and now I think we're going to come lower and see if we can sort of break below the 1676 here and the 2021 sort of double bottom. That's essentially what I'm thinking is the target for anybody that is finding that resistance is proving too much, and they might as well go short to see if they can find some value and some more buyers at lower prices. So that's the sort of thesis, that's the hypothesis, that's kind of what I'm looking for. Here we can see we had, pullback below the 1800 into the 1780. This last red candle here, the last of the sellers before the buyers stepped in 2022. The buyers are still there when we tested on the 16th of May. So, we've used up most of the buying pressure that was left there, the sort of orders that were left, we sort of use them now. We found it hard to get back above this candle here from the 6th of May. So 4th and 5th were sort of central bank days. So the 4th was the Fed, this green candle, 5th was the Bank of England, and then this 6th of May was the last of the buyers, around that time before they got sort of sold off. So we looked at that low from the 6th of May. That's acted as resistance now, and it looks like we're going to try and at least test yesterday's low. And then if that happens, we break through there, then I think we just come back. And then we're looking essentially to take out this double bottom here between the 7th of January 2022 and the 28th of January 2022. So that's the first target. If we get through there, and that becomes possibly old support, then becomes resistance. And then we start to look for, a continuation lower, where that becomes resistance, and then we just move down, like I said, to take the liquidity at this double bottom down here. So I'm just going to mark this up. So this double bottom here is the ultimate target for me. Whether or not we can get down to 1450, I have no idea. I just think that obviously there's a lot of resistance above. They're proving it to be very hard resistance to get through, and the sort of the path of least resistance is to the downside. And then this is like the most obvious places where stops will be left. So under these swing lows here, there'll be some stop orders. And then this double bottom here will be some liquidity. And if you look to the left, it even sort of makes like this triple bottom, if you like, for using the June 2020 low. So that's kind of what I'm looking for. If we go to another chart, we've got this inverse relationship going on. So the black line is the price of gold. This is the gold futures. Looking to this blue line, this is the US 10-year constant maturity inflation indexed sort of asset. And we can see that it trades inverse to the price of gold on a monthly basis. We had obviously a peak here in the tips and a trough here in gold. And you can see that happens throughout the last, good 10, 12 years. Looking to what happened recently, 2020, got this high in gold, tips were made a low. Then we had another spike high in gold, and then we made a lower low in the tips. Now we've broken through the market structure here from 2021, but we haven't done so on the gold. So because this is an inverse relationship, I am expecting this move to actually accelerate to the downside, to sort of follow a similar path, but obviously inversely to this blue line. even if we just get back below this market structure, I think that's when the sort of trade could be considered complete. And, anything below that is a bonus. Looking at inflation, because obviously that blue line is inflation indexed. Inflation is making, higher highs and higher lows at the moment. Some people are getting excited about this drop off in the PCE. This is the core PCE. Core PCE means it doesn't include the energy and inflationary pressures from food, but this blue line is the sort of everything included. We haven't made like a significant drop off. We just sort of tailed off from February's high reading. March came in a bit lower, so we're hoping that the next reading comes in lower still, obviously, because nobody really likes paying higher prices. If we look at core piece CPI and nominal CPI, we can also see that March sort of showed the highs here, and we have dropped off a little bit. But we did have something similar back in 2021, where we had a couple of months of down before this big resumption higher. Alternative core inflation measures all pointing higher. Producer price index pointing higher, and crude oil prices, even though they're not pointing higher at this very moment, we're kind of in a range. We have not made a significant break lower than the sort of April lows here. So if we were to break back below the $100 and sort of stay there, then yeah, maybe that helps bring inflation. Well, it would help bring inflation lower, and maybe this chart here, this blue line, would also sort of start to ease off from its exponential rise. Going back to this chart, we can overlay the dollar index. Again, when the dollar index makes a sort of spike high, and we see a trough in the gold. When we make a trough in the dollar index, we make a peak in gold. Currently, we obviously had dollar index come up towards the $105. That broke lower from there, found resistance, and that's kind of why we're seeing, in my opinion, and why we're seeing the gold rising. Lots of traders trade XAU over USD, so that gold, priced in dollars, and obviously if dollars come lower, then the price of gold can go higher. So I think this sell-off in the US dollar index had quite a lot to do with the price of gold rising. Essentially, we need to sort of see what happens next. We did make a sort of break of market structure on the daily time frame for the dollar index. If the euro was to collapse again rather than going higher, then this dollar index would probably go higher, and then we'd see the acceleration lower in the gold price again, in my opinion. And that's what I'm looking for on the gold, sort of coming here. We've got FOMC meeting minutes tonight, so they will give us more color on how they sort of envisage the inflation sort of panning out, and what they're going to do if it sticks around for longer. Or if, some central bankers will probably want to see what happens with the data. They might ask for a pause in the rate hike rather than just keep on pressing. If we were to draw a trend line from this low here, so this is the middle of May, go through this one point here from 19th of May, we could come lower just today, take out this swing low here. I'm essentially looking for any sort of swing low as a reaction point. If we get back below this rising trend line and the 23rd of May, this swing low here at 6 p.m., then we probably look to then make a sort of break lower still. So it would be something like this, where you break down, retest, continue lower. And then we're just looking for double bottoms like this one here. So even on a 30-minute chart, there's like lots of areas where there'll be double bottoms. That would be a draw for liquidity. We've also got impulsive moves here. So at 9:30 on the 19th of May, we had a correction and then this big impulsive move. So that's an imbalance. There'll be orders left here around 1814. So again, looking to see if that becomes a target. And the more of these levels that we take out to the downside, the more of these type of trend lines that we break through, retest, and confirm as resistance, the easier it'll be for us to sort of keep carrying down towards the 1776. And if we do that, if we get back to the daily chart here, if we break through this double bottom around 1780, 1776, and then that becomes resistance, then that really does set us up for a big push lower as we start to attack these swing lows here and this double bottom. So that's kind of the path I'm looking for. Charts like this keep giving me, focus on which way I think the market should be going. If we look at, this chart here, potentially if we were to break higher than this high from the 5th of May, then maybe I would start to look for, the potential for a rise in the gold price. But at the moment, we're struggling. Every time we get to some sort of resistance level, we're struggling to get through it. And the path of least resistance is definitely to the downside. So, like I said, if we get back above, say, 1900, pull back, where this was support became resistance. If that became support again, then we look to sort of go higher that way. But at the moment, it definitely looks a lot more bearish. All right, that's what I'm looking for on gold. Good luck today. Maybe come back tomorrow, London trading session, and see where the gold price is, and then sort of decide which way you think is going to go for the next couple of weeks. All right, good luck, and I'll speak to you again tomorrow.